Ladies and gentlemen, good day and welcome to Q2 FY25 earnings conference call of Alembic Pharmaceuticals Limited. We have with us today Mr. Pranav Amin, Managing Director, Mr. R.K. Baheti, Director, Finance and CFO, Mr. Nilesh Wadhwa, Head, International Business and Strategy, Mr. Ajay Kumar Desai, Senior VP, Finance. As a reminder, this conference call is only for analysts and institutional investors. All participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference call is being recorded. I now hand the conference over to Mr. Pranav Amin. Thank you, and over to you, sir.
Thank you. Good evening, everyone. Mr. Baheti here with me, who's got a little sore throat, so I'll just read out his part. Thank you all for joining the second quarter results conference call. I'm sure you'll have received the results by now. However, let me briefly take you through some of the numbers for the quarter ended September 24. During the quarter, total revenue grew 3% to 1648 crores. EBITDA is at 257 crores, which is 15.6% of sales, and it's grown by 18%. Net profit grew by 12% to 153 crores. EPS for the quarter is 7.79 per share versus rupees 6.95 for the previous corresponding quarter. The gross borrowings are 995 crores compared to 784 crores on September 2023. The company has 122 crores of cash on hand versus 141 crores of cash on September 2023. I'll just give a brief about the India business on behalf of Shaunak. The India branded business grew 6% to 609 crores for the quarter. It had good growth in specialty therapies such as gynecology, 8%, cardiology, 11%, anti-diabetic, 18%, and 13% in ophthalmology. The animal health business again continues its robust growth, and it grew 20% for the quarter, with a basket of strong brands driving the outperformance. We had 3 launches in India during the quarter, and the new launches continue to do well, along with a lot of promising future ones across key segments. Coming to the international operations, the US FDA we had a surprise inspection from the US FDA at our oncology facility, which passed without any Form 483. The US business continues to see price erosion, but we partially offset that with an increase in volumes and launches. We had about a 25% growth in the US volumes in spite of this. We continue to build momentum with new launches and should hopefully see better growth in H2 with a lot of our launches coming up and being a little more back-ended. We should launch about 10 products in H2 as well. Our R&D expense was 8% of sales at 133 crores for the quarter. We filed 1 ANDA. We also received 9 approvals and launched 8 products in the US during the quarter. And as I mentioned, we will launch about 10 products in H2 as well. In terms of financials, the US generics grew 5% to 467 crores for the quarter. The ex-US generics was back on growth at 18%. We did have some supply-related issues the first quarter and part of second quarter, so I expect this part of the business to continue growing like this in H2 as well. The API business grew by 15%. This is a trend that we've seen the last couple of quarters. We've seen some price erosion in the API business and have lost some key accounts. However, the long-term outlook on the API business still looks good, and it's a high-margin business for us. With that, I would like to open the floor for Q&A. Thank you.
Thank you very much, sir. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question is from the line of Rashmi S. from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. One question on the domestic business. We are seeing a very strong growth in your animal healthcare business, but we are seeing a very we are seeing a growth slowdown in the specialty segment also. Earlier we anticipated that, we will be growing this into the double digit. So, when can we expect this growth to come back, and what is leading to this slow growth in the specialty segment? And in acute segment, we have seen a decline, and I understand that we have a high base of azithral. But if you can give more clarity on this part of the business also, ex-azithral, how are we doing? And for the full year, what should we expect in terms of the overall domestic business?
So, couple of parts on your question. Let me try to answer one by one. H2, which we continue to expect to grow better than the market on an overall basis, particularly the specialty segments. Yes, antibiotics, yes. Acute have degrown, but not degrown. Have grown or has been flat, but we are still better than the market in our RPMs. So that's the situation in the market. But our efforts continue, our activities continue at clinic, and we hope that we should post a better performance in Q2, H2.
And Rasmi, just to add, on the specialty side of the business, basically for Q2, market growth was also in single digit, and we performed in line with the market.
Okay. And what about your ex-azithral? How much growth we have done in acute part of the business?
So basically on cough and cold side, there is a growth in single digit. But on anti-infective side, and majorly it is driven by azithral, the impact is getting felt. Yeah.
Okay. But for the overall FY25, the growth should be in high single digits sort of for this year?
For us to do a high single digit growth for
domestic business.
No, for the whole year, I have to do 15% growth on H2, which may not be possible, but
okay.
We should do a high single digit growth at least in H2.
Got it. And then going ahead in FY26 and 27, how should we look at it? What are the initiatives?
We have not been giving guidances.
No, I'm just asking that, what are the initiatives that you are taking to drive domestic growth, like in terms of adding market field force or, new product launches? What are you focusing on more, volume growth, price hike?
Driven by growth in number of field force. It's more driven by better productivity out of our existing team.
Yeah, but anything any focus on volume growth or price hike?
I would not like to get into details at this moment.
Okay. And second question is on the US business. We have done very good number of launches, and what is the expectation in the second half? The current run rate definitely would pick up in the second half. So any guidance on the US part of the business for the full year?
Yeah, so I don't have a guidance for you, but H2 will be much stronger for us compared to H1. A couple of reasons for that. I think a lot of our launches are back-ended, and they will start picking up. We will start picking up share only in this quarter onwards. So I think H2 will definitely be much stronger for us in the US market, as it will be for the ROW market as well.
Okay. And my last question is on gross margin. Gross margin, despite, India business has not done well, we were able to maintain it at 74%, which is much better than last year. So is it that, it's majorly driven by the US segment and your non-US segment? And, in case if India business comes back, at least in line with the IPM in second half, how should we see the gross margins in your second half of the year?
I've responded to that question multiple times in the past that we are happy with anything which is 70% plus, and up 1 or 1.5% margin here and there doesn't make big difference. It will depend on the product mix of that quarter. It can depend on new launches which we do. It can also depend on ratio of oral solids and non-oral solids in U.S. So I think 72-74% is a good range to be
Taken. Okay. Thank you so much, sir. That's it from my side.
Thank you. Our next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. Pranav, my first question is on the U.S. price erosion. So you mentioned you continue to see this. Can you comment, like, has there been any change compared to, say, last few quarters in terms of intensity of price erosion?
I think it's the same. To be honest, it's just product specific if something happens. But it's the same routine price erosion that we continue saying. It could be anywhere between high single digits to low double digits. That's what we're seeing in terms of the market.
And what are your expectations on pricing part? Will similar level will continue, or we can see some meaningful changes in coming quarters?
I think the fundamentals haven't changed, so you will continue to see pricing pressures. As I mentioned, that from the high margin that we were selling some products has come down, so the impact will get a little lesser. But I expect H2 to be much better for us because we have a bunch of new launches that will start picking up steam in this quarter and the next quarter as well.
So you mentioned around 10 new launches in second half, right? Or that's just
10 new launches in second half, and also, but the first, the launches, 8 launches that we've done in this quarter, it will gradually, as you've seen historically, Alembic, we always gradually ramp up our market share, and I think the same thing will happen. So hence you will see the 8 launches that we've launched this quarter plus the 10 in H2 as well. So both these put together.
Okay, that's clear. And one question on R&D. So earlier you indicated 550 crore of R&D for this fiscal. Do you maintain it, or there is any change in your expectations in terms of spend?
Yeah, so I think it'll be a little bit on the lower side. I'd say between 500 to 550, and I think we will be closer to the 500, 520 kind of levels.
Slightly on the lower side, okay. And again, if you can remind where this majority of R&D is going right now in terms of formulations or...
So it's, so I would say about 70% of it is formulations and about 30% of it would be on the API side.
Okay. And my last question is on your API. You mentioned you lost some accounts. So those are permanent losses, or what has led to...
Yeah, so it's a fundamental business shift, and I think what has happened is we've seen some pricing erosion in the API business. As you know, our API business over the last 15-20 quarters has been growing very significantly, and it's a very high margin business for us. So we lost some business. I think some partners have put in an alternate source. So we are still there, part of it. We may recover it. Let's see how aggressively we do it. But I expect that part of H2 will also be at these levels of the API business, and hopefully towards the end of the year or next year, we will start getting back to growth in API.
So API should be recovering from next fiscal, most likely.
Yes, I believe so.
Okay. Thank you. Thank you for your response.
Thanks.
Thank you. Before we take our next question, we would like to remind participants that you may press star and 1 to ask a question. Our next question is from the line of Abdul Qadir Puranwala from ICICI Securities. Please go ahead.
Yeah, sir. Thank you for the opportunity. So just a couple of questions, starting with your US business. So among the 8 products what you have launched in this particular quarter, any flavor you would like to add on how the launches have been? Is it in line with your expectation when we talk about a very strong second half of fiscal 25?
Yeah, so as I expect, I expect H2 to be much stronger for us. While on the H1, Q1 and Q2, we did launch some products. And I'll give an overview of the international generics, what happened in H1. I think we had some supply constraints in H1, which we weren't very aggressive with picking up share in the market. We had the ROW business also, which didn't grow as much in the first quarter. It's back to about 18% growth in the second quarter. This has a strong order book, and I expect that the H2 will remain at these similar, like 15 to 20% growth, at least for the ROW business. The US generics also we've ramped up. We generally, as I told Damayanti earlier, that we generally slowly ramp up our market shares. You'll see the benefit of that coming in the H2 and a couple of new launches as well. So that should help the US business ramp up as well.
Understood. And the second is on your filing. So if I look at the H1 numbers, you filed four products for the first half. Again, what do you aim to file in the second half? And this if I compare with your R&D, so your R&D, it's still kind of flattish if I compare with H1 24, but the filing count has not been that significant. So
it's a good question. I think so. What happened is a couple of years back when we started tapering off R&D spend, a lot of the projects were already in the pipeline, correct? So you will see a lag in R&D filings. I think this year we will see a lag in R&D filings because some R&D filings, number one, are getting pushed back a little complex. And number two, we had a slight lag when we started reducing the cost. So we had let go of some projects. So there will be a lag. I think from next year onwards, we will get back to the higher 15 odd ANDAs that we've been filing.
Understood, sir. And the final question on the other expenses. So just to understand, is this the run rate to what we can peg for the quarters ahead, or does this include certain one-offs or any color to that?
No, there are no one-offs except that some expenses, particularly in the India business, typically Q2, Q3 have a higher expense in promo and marketing than Q1 and Q4. So apart from the cyclic this thing, there are no one-offs.
Got it, sir. There will be some.
But if you compare Q2 versus Q2 of previous year, I think it will be similar numbers.
Understood. Thank you.
Thank you. Our next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity, sir. So with respect to this API business, we've lost some accounts. So if you could just maybe probably elaborate the reasons for this?
Yeah, so I think it's just a matter of price erosion and competitors offering lower prices. And we moved some. I think there are a few key accounts that we lost which built up a chunk of it, but we're seeing price erosion. Unfortunately, the export data from India is very opaque, and people have taken advantage of that. So that is what has caused part of this. But we're working on it to get some of the business back that we can. As you know, we do supply. We'd like to keep higher margins. We do stress a lot more on the quality and timely deliveries, and we're supplying higher prices. We're also seeing China get a little more aggressive on the API side as well.
So is this to do with the inventory in the system for the API portfolio that we have, or despite normalized inventory, we are seeing further price erosion?
No, inventories, Tushar, have been built largely ahead of these plant launches. So these are planned.
Not at the company level, sir. I'm referring to the inventory of those products at the industry level.
No, I'm talking of inventory for the international business. Largely has been built for plant launches.
No, sir. I meant to ask that the lost business, particularly for the API side. So, maybe the other guys are able to are willing to supply at lower prices. So just trying to further, understand that is it the inventory at the industry level itself is still so high that, the peers are, coming and willing to sell at a lower prices, which we are not, we don't want to do. Is that the case?
I think it's just purely related to pricing. I think these products are used by others as well. So I'm not that worried about the inventory per se. It's not a concern. It's just that they've moved. We are still part of their active filing, right? Because our DMF is part of their active ANDA or the dossier that we have. It's just that they've moved to a second vendor. Sometimes buyers do it to try getting a better price when they keep switching between two vendors as well.
And lastly, this is to do with supply to US market or ex-US market for API business?
API is a global market, so it pretty much goes all over the world. So it's even Stevens, I think it's US as well as Canada, Europe, Brazil, everywhere. We're seeing a couple of products. There were one or two customers which were selling in the US, but they had an FDA issue, so that has a lower offtake for us. The rest is just pricing pressure, and some customers have moved to another buyer. And the third issue is our buyers themselves have lost market share in some products.
Understood. That's helpful. Thank you.
Thank you. Our next question is from line of Dvinopati Paramveer from Elara Capital. Please go ahead.
Hi, good evening. Just two products in the U.S. market. Wanted to know if it is something we can expect in the next 12 to 24 months. One is bosutinib and the other is olaparib.
Sorry? Bosutinib?
24 by 26.
You can say, go ahead.
So yeah, I think these launches are expected. Of course, they will go as per the settlement.
Yeah, could you give any color in terms of can we expect in the next 12 to 18 months or is it beyond that?
These are potential, so we can't share the exact date.
Sorry to interrupt, sir. If you can come a bit closer to the mic.
So these will go as per the settlement we have, so dates cannot be disclosed right now.
Understood. And on olaparib, is there a settlement already or is it still under litigation?
Olaparib. Olaparib. What is under settlement?
Yeah, olaparib is under partnership.
Yeah, wondering if you have settled it already or is it still under litigation?
Still under settlement.
Okay, got it. Thank you.
Thank you. Our next question is from line of Gagan Thareja from ASK Investment Managers. Please go ahead.
Good evening, sir. I hope I'm audible.
Yeah.
Yeah. So the first one is on your operating cash flow, which I think is negative year to date for this year. There's a rise in working capital. There's also an increase in debt sequentially as well. So can you elaborate on this?
So yeah, I'll just start on the business side and then I'll let Mr. Bedi talk about it. So business side, few things happened. As I mentioned, Q1, Q2, we had a lot of supply constraints in the market. These supply constraints caused us to build up more inventory. So this, as I said, that H2 will be more robust for both US as well as the Europe. So I think we should see a little more normalized. Number two, we have a lot of launches coming up and we've been planning for that. So those launches is something that we built up inventory. So those are two of the reasons why we had little higher inventories, which has led to a little higher debt.
Yeah, and I think in September quarter, debt spikes a bit because of the dividend outflow, and it will then settle down over the year, rest of the year.
Right. Can we expect to maintain our working capital days and cash conversion cycle for FY25 at same levels as FY24? In the close of the year?
Probably that would be a close call, but I think going forward, if we talk of FY26, I think we should be back to normal working capital cycle.
All right. I think on the domestic business, is it possible to to understand? I mean, it generally seems that across the board, acute heavy portfolio companies are struggling for growth. While it's understandable that your growth is in line with the covered market. Is it possible to further drill down and understand why the covered market in acute segment seems to have grown so weakly across the board for Indian companies? I mean, as a customer, I don't see any reduction in incidence of infectious diseases. Personally speaking, my experience has not been any different this year, if anything worse than last year.
Actually, it is because this time monsoon was a little late, so even in the month of, monsoons really revived. June was bad, so the offtake from the stockist was low. July onwards it picked up, but again the disease portfolio has changed. The footfall with the doctors for acute has gone down. If you look at the market share, look, we have not lost the market share. We continue to perform better than the market. We continue to improve, maybe a small percentage basis point, but we continue to improve on our key products market share. So that way we are really not worried, but yes, market has been slightly slow.
Okay. Would it have something to do with trade generics also? I mean, do you believe that overall branded generics in acute segment would have additionally lost share to trade generics?
Possible. I mean, I would not say it's still significant, but in pockets, some regional players can play disruptor, trade generics can. But I think on an overall, all India basis, not much difference.
Okay, sir. Thank you. Thanks for taking my questions.
Thank you. A reminder to the participants that you may press star and 1 to ask a question. Our next question is from line of Harith Ahmed from Avendus Spark. Please go ahead.
Hi, thanks for the opportunity. I see a tangible CWIP of almost 650 crores on the balance sheet. Can you share which facilities this is related to, and if we are capitalizing any costs currently like we used to do in the past?
So we have 3 major projects as of now in hand. One is that a new formulation facility for domestic market, which is coming up at Indore, near Indore. That should be completed by the end of this financial year. The second is the peptide block which we are building at our API facility, existing API facility, and the third is these couple of line extensions which we are doing at F3. 2 more lines we are adding, like I shared this previously also. So currently we have 3 operating lines. We are adding 2 more lines to. One will be operational, I think, by end of this year, and the next probably the last one early next year.
Okay, thanks for that. And in your annual report, you talked about 2 filings in the peptide space. So, can you comment whether these are for GLP-1 products?
So the GLP-1s, as you know, is an interesting area, and it's a future that we're seeing, and we're entering some of these both from formulation and API perspective. So hence we had to build this capability for in-house APIs. We've got R&D that's developed it, and we want some of the products we're going to tackle day one as well.
So the 2 filings that we have already done, are these for GLP-1 products?
Sorry, I didn't get for GLP-1 how many filings we've done?
In your annual report, you mentioned a couple of filings, two NDAs filed for peptides. So I was wondering if these are GLP-1.
No, the ones that we filed are not GLP-1. They are the peptides.
Okay. And when I look at your number of MRs and calculate the PCPM, we've been around that 4 lakh PCPM for some time. So, any divisions that are underperforming where we can expect improvement or any other measures that we have undertaken which can drive an improvement in our PCPM and our domestic margins?
So we don't look at underperformance or overperformance by that average of 4 lakh or 3.5 lakh. We look at their performance from the budgets which we have given to them. So like any new division or any new product which we introduce would have a lower PCPM to start with, and that is not something which is on the wrong side of the marketing people. So there are multiple factors which we evaluate when we evaluate performance of people. But having said that, I agree that there is scope for improvement in our MR productivity, and that's what we are working on. I think in response to one of the earlier questions, I said that the next level of growth will come from productivity improvement and not increasing the number of people.
Okay. Thank you for taking my question.
Thanks.
Thank you. Next is a follow-up question from the line of Rashmi S. from Dolat Capital. Please go ahead.
Yeah, thanks for the follow-up. One bookkeeping question on other income, that seems to be pretty high during the quarter. So does it include any Forex gain or any one-off?
Yeah, so there was some Forex gain this quarter.
And if you can quantify that?
That would be about 10-12 crores.
10 to 12 crores. Okay. And, when I see the balance sheet, the short-term borrowings have jumped up from 450 crores to around 995 crores. This would remain at the same level till the end of the year, or any repayment is planned?
So I responded to this in previous session, saying that Q2 typically would have a higher borrowing because of dividend, a chunk of dividend outflow in one stance. And I think it will get, the borrowing level will get reduced over a period of year. Also, as Pranav said, we have built some working capital which should also get consumed before the end of the financial year. So hopefully the borrowing level will be much lower before end of the year.
Okay, got it, sir. Thank you so much.
Thank you. Our next question is from the line of Amalan Das from Nomura. Please go ahead.
Guys, so probably I missed in the opening remarks. What was your R&D spend for the quarter?
It's R&D.
130 crores.
No, you are asking for R&D, no?
Yeah, R&D spend for the quarter.
At 130 crores, it was about 8% of sales.
Okay, thank you.
Thank you. Our next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Hello. Am I audible?
Yeah.
Hello. Yeah.
Yes, Mr. Ankit, you're audible. Please go ahead with your question.
Sure. My question was on the GLP front. We are saying that we have couple of products where we'll be planning to launch on the first day. So I just wanted to understand, are they some of the large products like SEMA or relatively lower revenue products?
So we don't really give a detail of what we launched, but one thing I can say is the H2 is going to be a much better performance for us for the US as well as the ROW business. As I mentioned, that ROW will be better because Q1 we had some supply constraints. So we expect this kind of growth to continue for the H2 as well. And the US, as I mentioned, we launched 8 products in Q2, and we've gradually started ramping up market share in these. We had some supply constraints. We also have about 10 launches in H2 as well. So with all this put together, H2 will be a much stronger business for US and the ROW generics.
Sure. So my question was particularly on the GLP, given the kind of growth the innovators are seeing in this segment. So, as you said, we are also planning to launch these products. So, how is the competitive intensity there, and are we also planning to launch, or have we filed for some of the large products like SEMA?
Yeah, so we will target semaglutide and tirzepatide both. There's still time for tirzepatide, and the launches are still some time off. SEMA, we will not be in the first wave. We will be a little later, but I think these are both interesting products, so they're both in a grid.
How do you see the competitive intensity there? These are very big blockbuster products.
It's a big product, right? It's a big product, and the indications are increasing day on day off. So we expect volumes also to continue growing. There's a lot of people working on this as well. So it will be competitive for sure, but I think it's a good opportunity, and you need to be present in this opportunity.
And this, are we also planning to launch liraglutide?
No, liraglutide we're a little late, so we haven't filed that.
Sure. And this will be manufactured by us, or will be outsourcing to some of the...
So Mr. Vaid mentioned earlier that we've set up a peptides facility. We already have the R&D. We're setting up a facility to do peptides as well as the GLP-1 peptides. So we will manufacture in-house.
Okay. So just wanted to get your sense, given this is a relatively new area for us and, these are peptide products which are difficult to manufacture. So, do you think we have developed enough capabilities to manufacture them in-house?
Yeah, that's why we did the CapEx. I think we started R&D way before this. The peptide R&D we've been doing for over 5 years now. So we do have confidence in that, and I think it's a good segment. As I mentioned, it's not just Lira, Sema, and tirzepatide. We will see more GLP-1s coming because we're seeing indications in the market improve. So we want to be present in this segment.
Sure. And just one question on this. Sema is are we planning to launch Sema in Canada also? I think that patent is getting expired in January 26. So will we be launching there?
I think, as I mentioned, Sema will be a little late. We haven't disclosed market-wise what our strategy is, but we'll be a little late. The following ones will be in time for all the markets.
Okay. Thank you. I sure understand.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Pranav Amin for closing comments.
Yeah, thank you, everyone. As I mentioned, it was a mixed bag. API was a little bit slower for us this quarter, but the other businesses are looking good. H2 should be a much stronger finish for us, especially on the back of the ROW and the US business. And look forward to talking to you next quarter. If there's any further questions, you can please reach out to us. Thank you, and wish you all the best.
Thank you. Ladies and gentlemen, on behalf of Alembic Pharmaceuticals Limited, we conclude this conference. Thank you for joining us, and you may now disconnect your lines.